Hello and welcome to Blytheway Business News. Today I'm joined by Dan Betts, Chief Executive of Hummingbird Resources. Hummingbird is listed on the AIM market with a ticker of HUM and has a market capitalisation of around £107 million sterling. Now, earlier this year, Hummingbird started to come good on its stated strategy of becoming a multi-site operator. Dan is just back from one of those site visits. Dan, welcome on the show. Where have you been and what have you found out?
Hi Tim, thanks for having me on again. Nice to be back. So I was in Yamfalila last week with the team, going through all sorts of things, all the processes, and looking ahead to the 2021 budget, and going through all the developments at site. We've had a lot of changes in the management team, and there's been a tremendous amount of progress. I mean, on an operational side, I'm extremely proud of the guys. I mean, this year, as we know, has been unprecedented in its challenges, and I think the team has come together amazingly well, and there's developments across the board when I look at the performance of the site. But unfortunately, it does look like, and that's the reason for this morning's announcement, we're going to fall short of our production guidance for the year, just as a matter of timing. You know, there's just not enough time left in the year to catch up on the ounces that we have fallen behind on earlier in the year. And I can touch on the reasons for that as we go forward, Tim.
Okay, well, let's get straight to that. I mean, you're in Mali. What are the sort of four headline factors which have impacted the performance?
Well, I mean, obviously COVID. I mean, I know it's a bit of a cliche, but it's had a tremendous impact on the whole business. I mean, our ability to operate, our ability to get support to site, checks and balances, reinforcements, moving people around, cost, testing. But most materially, I think, is border closures and the logistical impact on site, whether that's our reagents or supplies, or most importantly, critical spares. And as we discussed earlier in the year, Tim, we took the management decision in Q2 to process more softer oxide material in that period of time to preserve the wear and tear on critical parts in the mill and the crushing circuit, because we just couldn't be sure when we could get the spares to site, and they were backing up around the world. And I think that was a prudent, responsible decision, and I think it was the right decision because the plant has kept going and is performing well. But unfortunately, these delays keep coming. After the initial lockdown, we had a military coup in Mali where the borders were shut for a month. And where we're sitting today, Mali is shut for another 28 days in a sort of another COVID lockdown. So where we anticipated being able to catch up on those ounces by processing more high-grade fresh ore, we've been slower to re-engage with that, and then also difficult to get back into those parts of the pits, because on top of all of this, we've had probably the worst wet season on recorded record in Mali. So, you know, the bottom of the pits we're talking lots of mud and difficult ground conditions that had to be cleared. But as I said, you know, on the back of some guys pulling 9-month shifts on site, they have performed miracles. The pits are in great nick. The mining contract is working well. As we speak, they've got access to the high-grade parts of the ore that are coming through the mill. And, you know, really, it's unfortunate, but it is deferred ounces. It's not a terminal issue.
Okay, so you've had a military coup, you've had COVID, you've had disastrous weather conditions. With the greatest respect, Dan, those are all items beyond your control, I would submit. So not much you could do about any of those. One thing you can do something about, I guess, is the ore body. Can you tell us what your sense of the ore body is?
Well, yeah, I mean, you can't change what Mother Nature put in the ground, Tim. There's nothing any of us can do about that. But I mean, I think what you're referring to is the performance of the ore body. And this year, we have continually been producing lower grade ore than our mine plan anticipated. And one of the risks that we see is the ore body performing as per the plan? And that's a risk that shareholders will pick up on as well as management. So going to site and seeing the logistical issues we've had firsthand last week and the delays we've had is totally put my mind to rest on that issue. The issue is that high grade ore that was due to make up the high grade component of our mine plan is still in the pit. It's what we're mining now, and it should have been mined. You know, if you look at the release, there's a link to some diagrams that clearly illustrate where that ore that would have made up the ounces is. So it's still to be mined. So I think the team's performance in managing dilution, in drill and blast, in recovery in the plant and getting gold out of the ore body is getting better and better all the time. It's as good as it's ever been. And that's not the issue we're talking about.
Okay, well, thanks for that. So that's talking about the fact that today we've had to announce the fact you're not quite going to hit guidance on production this year. Let's look to the future, though. At the start of the interview, I mentioned the strategy of going to be a multi-site operator. Looking to the future, what's your feelings about Hummingbird in 2021, Dan?
I mean, it's a good question, Tim, because it feels like a game of two halves. Operationally, this is a disappointment, and I can assure you it's borne heavily by the guys who've worked their guts out to deliver, and we're looking like we're going to fall short. But strategically, I think Hummingbird's never been in better shape. I mean, we have our joint venture partner developing Duby. We have our Carusa project in Guinea gathering momentum and looking good. Our exploration programs at Yamfilila to develop mine life have shown some extremely encouraging results this year that we're looking to develop into resource models and announce into Q1. And I think the deleveraging of Hummingbird has continued apace. We haven't missed a beat on that. At the end of the year, we should be with only sort of $10 million of that loan outstanding, and it will be totally repaid in the first half of next year. So I think actually as a company, Hummingbird's in great position. I mean, obviously, Tim, another thing to factor in is the last month we've had a big pullback in the gold price, probably a 10% pullback, and that's had a negative sentiment on the space. It's up to each and every person to make up their own mind what they feel about that. But my view is gold's here to stay. I mean, the amount of money being printed it's impossible for me to comprehend, but it must be good news for gold in my view. So I think Hummingbird is set for a great future, years of more stable production at Yamfilila with no debt. And, you know, let's just crack on and get through these challenging times.
Dan, thanks for sparing the time. Thanks for coming on the show, updating us. That was Dan Betts, Chief Exec of Hummingbird Resources, updating us on current production and future opportunities. That's all from Blytheway Business News for today. Thanks for watching.